That was, of course, the management at Wipro. We'll keep going as more details come out. Meanwhile, there is another development that Infosys has gone ahead and declared its numbers. Numbers on the face of it are looking in pretty decent, pretty strong in terms of numbers. So the revenue growth in CC terms was about 19% YOY, 6.3% QOQ. I think 6.4 is what the street was anticipating. I think the margin guidance on the street was expected between 16 to 18%. They have given 16.5 to 17.5%. So it's higher than the lower band expected, marginally lower than the higher band that is expected. But however, the range was pretty small. So it's just about 1% number. So, it's always taken when the range is narrow, it's easier to predict the numbers, and maybe that could be the benefit as far as the management goes. Digital revenues 56% higher, CC growth 42%, operating margins 23.6, again a very, very strong number. Free cash flow generation of 711 million, free cash flow conversion at about 97% of profits. We have Omkar now from Axis Securities. He's with us. Omkar, what do you make of the first take on the numbers? What is the sense that you get?
Yes, we definitely get. Infosys have reported strong set of numbers in terms of the margins. The revenue growth was is reported as much in line with the expectations, but it has shown a superior execution in terms of the margins. They have also raised the guidance for the revenue. So that has also shown the resilience in the business that they have, and also shows that the demand scenario also keeps an intact across geographies.
How would you look at the numbers, say, compared to a TCS and probably a Wipro as well?
Yeah, it has surpasses the growth that the TCS have reported. Its revenue growth in CC terms have reported more than double. I mean, TCS have reported 3.2%, and whereas an Infosys have reported above 6%. But TCS is having the larger scale, so it is not that comparable. But Infosys definitely looks to be strong in terms of the execution. The only thing that is being worried is about attrition rate, which I think at 20%, which TCS has controlled to 11% in the current quarter. But otherwise, the Infosys definitely has reported a strong set of numbers and shown the superior execution in terms of delivering the deal.
Right. Did you have a look at the Mindtree numbers as well? What is the sense that you get? Of course, a much smaller company, but what is it talking in terms of trend?
Mindtree has also reported strong set of numbers, but it has got the lower base as compared to these numbers. But I think they have executed well. It's been already a good company in terms of execution. The DCF reported, DCF performed the very well in terms of in past few quarters, and to take the Mindtree into the different growth trajectory. So I think they have also reported strong set of numbers. Currently, the numbers are not with me, but I know that they have done quite good.
What do you make of this guidance increase? It was largely factored in. What was the expectation?
Yeah, I mean, I was expecting around 1% increase in guidance, but they have increased the guidance 16.5 to 17.5. So that they have already, and also in the factoring in the price because of the rally that IT services have mainly seen in the previous few quarters. I mean, previous few months. But I think the macroeconomic development and the macroeconomic scenarios are still remain robust in terms of in terms of the deals that are coming on their order book, and order book will still remain robust. So I think they are favorable. The liquidity is looking very, very strong for next 6 months and for further. So it looks to be a positive for IT sector as well.
Trip Chaudhary is also with us. Trip, how do you look at Infosys numbers, especially considering after TCS, there was a lot of if and but as to what will happen?
I think the numbers are excellent. I think the macro picture is also very good. I think what you're seeing in TCS is just a quarter hiccup. I think all the Indian companies, if you have a 12 to 18 months of investing horizon, will do extremely well because the major shift that is happening in the industry is a shift from spaghetti code to software engineered code. And somehow, over the last 2 to 3 years, the skills to do engineered software engineered code is lacking in USA and other parts of the world. I think the business of Infosys and even TCS and other companies will be extremely robust over the next 12 to 18 months.
Do you think these numbers are the one where you can see upgrades coming in or re-rating coming in? How would you look at the numbers, or you would wait for the press conference before that?
I think if you look at the bigger picture, I mean the press conference and other stuff is just it's irrelevant. If you look at what the research is showing, there are three things that is happening. First, and the most important is the movement towards modern architecture and modern software engineering. That's a major trend. And India, IT services companies are front and center. Second trend is there is opening of IT budgets for modern architectures, and in that situation again, over the last 3 to 4 years, almost every Indian IT services companies have increased their capabilities so that they can go and implement new software using new technologies. Third, there is a massive interest and upgrade in Oracle Fusion apps and Oracle Cloud. All the surprise that we are seeing, positive surprise coming because increased project pipeline for Infosys and other companies also to do Oracle implementations.
Thank you so much for taking out time for us, Omkar. Thanks so much for taking out time, taking a break, coming back quickly. The presser of Infosys should start anytime soon. We are on standby for that.